Hi traders, in today's video we will take a look on the euro dollar, cable, dollar yen, gold, oil and the S&P futures. Now on the euro dollar weekly chart we are still expecting lower levels here because of potential end of wave E rally, which is a final leg within this contracting triangle in wave B, started from 2008 lows. So we are focused to the downside because, as you know, on a daily chart we identify this as a 5-wave decline. So bounce from here should prove corrective, which means that we expect to see that this recovery will be fully retraced. So we expect a break of this swing low here. We were bearish, we turned bearish here and came down all the way towards this support line connected from October, I guess. From November of 2011, and as we can see the market reversed sharply to the upside. This is quite concerning because of strong upward reaction, but as long as the market is trading below this critical level, I will still be bearish. Okay, I will not switch the wave counts, especially not these daily wave counts, from on a day-to-day basis, because the FX markets are sometimes very choppy. So of course I definitely need to see invalidation levels broken in many cases before I will switch the wave count. Okay, so for now I'm still bearish, I'm still looking to the downside. However, before my bias can be confirmed, I definitely want to see this recovery to be fully retraced. Okay, maybe already early next week, then this would be a very nice indication that this rally was just a fake and that bear market is much stronger than bull market. Okay, so in such case I think that there will be strong chances for a significant sell-off on the euro dollar. So on the 4-hour we are still observing this move as a potential corrective movement. I'm tracking this wave 2, which in such case should find resistance around 61.8% retracement area. For now this appears to be a minor correction within this ongoing uptrend, so expect higher levels early next week, maybe spike above this level, and then if my count is correct we should see impulsive reversal to the downside. Okay, if the market will just move straight up towards this level, then of course this wave count will be invalidated and I will have to rework the wave count. So for now, yes, I'm tracking the bearish wave counts, but I need a confirming price action that will support the idea for weaker euro, which means I need 5-wave decline. Okay, so meanwhile, of course, the bullish wave counts are also possible. I have received several emails from our clients. What are our alternations for the euro dollar because of this sharp recovery? So I prepared one wave count that's actually a very similar wave count. That's the weekly chart, a very similar wave count to our primary labeling, but the main difference is that this wave E in wave B, which is a final leg of this triangle, is still underway. Okay, so we may see test of higher levels, maybe even 1.4 level before we may see a reversal to the downside. However, this is my alternate wave count. Okay, so keep in mind that. Here, as I said, we could see higher levels for a push into wave C. So if this will prove correct, then this should be the right labeling. Okay, so I came out with triangle placed in wave B in the middle of a 3-wave rally in this wave E. Now notice that this was a strong move to the upside, but still only in 3 legs. Okay, we obviously moved well above the start point of wave A, so that's this is actually called a running triangle. Okay, and since then we came sharply to the downside and we are just moving sideways. Okay, so this count is actually valid and it could be a triangle, but in such case of course we need to see these wave D levels broken. Okay, so if this my wave 2 on the primary labeling will be invalidated, then of course I will probably switch to this wave count and will focus on another 5-wave rally in wave C before market turns to the downside. So for now, traders, we need to keep in mind both wave counts, because the market is very choppy, and in the choppy market we know that there are many different interpretations possible, and chances are actually 50-50. Okay, but I will stick to this wave count as long as the market is trading below the latest swing high. So that's for the euro dollar, and now let's take a look on cable. Actually, the reason why I'm tracking bearish wave counts on euro dollar is also cable. On the weekly chart, we identified the end of this wave B triangle at this point here because of an impulsive fall through this support line connected from 2008 lows. Then we were tracking a 3-wave rally. This was probably wave 2, which reversed nicely from this trendline resistance. Okay, so when trendline is broken and when you see a pullback, then expect to see a reversal from this trendline, because support line will become resistance. So that caused this reversal caused another sharp drop in price here. We took this low out for a few pips, but now reversing higher. So I think that this is only a temporary recovery with an ongoing downtrend, and notice that this cable is actually still far away from this invalidation level. So euro dollar is stronger, obviously, but because of the bearish interpretation on cable, I will stick to the bearish interpretation on euro dollar as well. So here's my wave count for cable. I identified this as a 5-wave decline, and now maybe a flat in wave 2, but I would not be surprised to see maybe another push higher here towards the wave 4 swing and up to this 50 and 61.8% retracement area, and then be aware of an impulsive weakness which will confirm the wave count, the bearish wave count. Okay, now let's take a look also on dollar yen. On dollar yen daily chart, we were tracking this recovery for some time now, and we noted in one of our past updates that if this wave count is correct, then 78.6% is the last Fibonacci resistance level that must hold. And in this week we have seen a very nice reaction to the downside, and this could be start of something larger, maybe even wave C back towards these lows. Okay, but interesting thing is that even if you're tracking maybe some other wave counts on dollar yen, the bullish one, let me check my alternate wave count here. Okay, even if you're tracking this wave count, when I marked this swing low as the end of a wave 4 and we are headed higher, we still need more weakness, because this, I think, it's impulsive leg. So this is the first leg of minimum 3 legs to the downside. So from a trading perspective, this could be for some traders an interesting short opportunity for the near term, because even if this is a correction, we need 3 legs down. Okay, and on this 4-hour count, this is an impulse, and now we can see some slow price action, some overlapping price action. This is characteristics of a corrective movement. Notice that based on time, we are now trapped in this range for a while now, while this was very strong move in very short period of time. Okay, so this is a typical personality for an impulse, while the ranged market is typical personality for a correction. So I think this is supposed with an ongoing downtrend, which either can prove corrective or maybe even impulsive. But as I said, from a minimum perspective, we should see one more push to the downside through this swing low. Okay, and then we will try to figure out the right wave count. It will depend on the coming price action. If maybe reaction to the downside will be very strong, much stronger and much larger compared to this first leg, then we will know that market is probably trading impulsively to the downside. If we will see maybe small move to the downside and then sharp reversal higher, then we will know that this is correction and that we are headed higher, and in such case we will switch this wave count and we'll start to track this wave count more upside in wave 5. So for now, be aware of more weakness probably early next week. And now let's take a look on gold. Firstly, let's take a look. Daily chart, we are tracking wave C down. Actually, let's take a look on the monthly chart. We are tracking this wave C down, which has room for much lower levels here, especially if we consider strong bearish momentum. Wave C, however, must be subdivided by 5 legs. Here was wave 1, wave 2, nice extended wave 3, wave 4 pullback, and now we are trading in wave 5 of C. Now also wave 5 is impulsive leg. It must be made by 5 subwaves before we may call end of this downtrend. Okay, so I am tracking this recovery as a temporary. It's also still in 3 waves. We are now testing this 38.2% retracement area. We are also in the middle of this base channel. Okay, we know that when base channel is broken in wave 3, like in our case here, then this base channel will in many cases become a resistance in wave 4. So in such case you're tracking the lowest trend line of the base channel and the middle trend line and the highest trend line. Okay, so as long as this trend line holds, or I should say as long as we are below this upper trend line, the market still could turn to the downside, especially if we consider only 3 wave rise. So on the 4-hour chart, if you recall, we however turned bullish for temporary recovery here on gold because of this 5-wave rally in wave A. We identified this as a corrective pullback, and since then market reversed or broke nicely higher into wave C. I also mentioned in our past video that this wave C will be confirmed once the market will take out this falling trend line. So actually this was a decisive break, then a small pullback back towards the trend line, which then caused another strong push to the upside. Well, as I said earlier, wave C must be made by 5 waves. Okay, and we know that counter trend movements are in 3 waves. Okay, so if you take a look at this structure from here very closely, then you can see that actually this recovery is still not in 5 waves. Okay, it's actually a 3-wave movement, so we expect another push higher, which I believe it will unfold in the next few sessions. Why? Well, because this decline on the lower time frame is looking to be corrective. Why? Because it's in 3 legs. Okay, so I think that this is wave 4, temporary pause within this wave C, so be aware of another push higher, and ideally we will test this upper trend line of this corrective channel, and at the same time keep an eye on this swing high of wave 4 of 1 lesser degree. So I believe the market will test these levels, and then we should keep a very close eye on further developments, because if the market will reverse impulsively to the downside in 5 waves back towards this trend line, then of course this will be a strong indication that we are headed lower in wave 5. If the market will of course on the other hand move sharply to the upside in impulsive fashion, then we will know that this is not a characteristics of a counter trend price action anymore, and that market is most likely in some new bullish cycle. Okay, and now let's take a look also on this technical chart. It's pretty interesting. That's daily chart, and notice that in previous swing highs, the RSI stopped at 50 line. Okay, it was here when the RSI was here, and then we have seen a move to the downside. Okay, the RSI again was at 50 level when the price was chopping around here, and then again we have seen a move to the downside. Well, now when we think that market is in wave 4, the RSI is again at the 50 line, and we can see that this recovery is now also at the region of a previous consolidation. Okay, so from that point of view, and if we also consider this is only a free wave rise still, then of course this move to the downside could be in the cards. But as I said, keep an eye on this 4-hour chart, because only confirming price action will support the idea for a weaker gold, which means we need 5-wave decline. Okay, so it's not important what the RSI is telling us, it's still the price, the one that matters. Okay, and now let's take a look also on crude oil. On crude oil weekly chart, we are tracking a temporary bullish moves here in wave D, which is still only fourth leg within this wave B triangle. So ideally we will see a wave D top in the next few days, and then a reversal to the downside. If that will prove correct, then we know that market must not move above this wave B swing high, otherwise this wave count will be invalidated. Okay, in such case I will start tracking just a second, this wave count. Okay, so if we will take this high out, this swing high, then I think we are already in wave C, which then could move much higher within this new 5-wave rally. Okay, but for now will still stick to this wave count, and we'll be looking for a potential signs for a bearish reversal, most likely next week. But at the moment the most important is that we focus on the price. The price is rallying, and also we need to focus on the structure of this wave degree that we are in, and I think that we are in a wave C. So the interesting thing is that even if you are tracking this bullish wave count, or maybe this wave count, we still need in wave C 5 waves. Okay, so I think this is wave 1, wave 2, nice sharp move to the downside, which seems to be wave 3 in a 5-wave rally, so expect a wave 4 pullback and then wave 5. So on the 4-hour chart I'm tracking this wave count. We were tracking this 5-wave rally in this week. We also noted in our past update that be aware of a corrective reversal, because we know that after every 5-wave movement, correction will follow. This has occurred over the last 2 days, and it seems that we are headed lower now in wave 4. Now typically wave 4 will retrace to the territory of a previous wave 4 of one lesser degree, which comes in right here. At the same time, we should keep an eye on this 38.2% retracement compared to this wave 3. This is the most important Fibonacci level in 4th waves. So of course if we will see test of these levels, then we would expect another bounce higher in wave 5, okay, towards 108, maybe even 109 level, but not above 110, because 110 is actually this level of wave B. But if this will occur, then we will know what will follow next. Okay, so for now we will stick with the current bullish trend on oil, but expect a deeper levels, because we know that corrections should be made by 3 waves, minimum by 3 legs, and for now I can see only 1 leg down, and this appears to be only wave B pullback, so I expect more weakness next week before the uptrend will resume. Okay, now let's take a look also on the S&P 500. On the S&P 500 we are tracking this impulsive count within a larger degree of wave 3. This was wave 1, wave 2 pullback, extended wave 3, and now it seems that this wave 4 has already finished. If you recall, I was expecting a little bit more complex wave 4, but I need to respect the price action, so I have turned bullish in 2 days back. after I identified very decisive break through this trend line connected from these highs. Okay, I think it was close around 1645, so obviously we were well above this trend line. We were already above this wave B swing high, so of course we need to respect the price action. I immediately turn bullish here because this now is looking very extended structure, quite nice impulsive wave count. So I think that we are headed higher because impulses are 5 wave patterns. We are now in the middle of this red wave 3. Typically wave 3 will touch 161.8% extension of wave 1 measured from wave 2. Okay, so I took this distance, wave 1, and put this distance on the low of wave 2 and project 161.8 extension, which comes in right here, just slightly below 17. Okay, so I expect more upside here, but in the near term we could see a minor pullback here back in wave 4, which could look for a support maybe at the previous swing highs or at these previous swing lows. Okay, so be aware of another push higher in wave 3 after a minor corrective pullback. Short-term critical resistance, critical support is at 1630, because if that's the wave 1, then we know that this wave 4 must not retrace into a territory of wave 1 or wave 2, otherwise this is not an impulse and the wave count will be invalidated. Okay, okay traders, that's it for today, and I will catch you with new updates on Monday. Oh, before I sign out, just let me also announce that we are preparing a new website, completely new design. We will added some new features, some we will start tracking more regularly, and some new markets. So I think it will be very exciting and much better website with much better navigation. Okay, so if you will have any suggestions, now it's still time to send us an email on info at ew-forecast.com, and maybe we will considering your ideas. Okay traders, have a good day, bye.